Yo, 365, shake my hand and good afternoon, everybody. Good afternoon if you're watching on the live. Good afternoon if you're going to watch this later on. Good evening, good morning. I just want to quickly, reasonably, at a reasonable pace, break down Euro USD. I'm going to be teaching you guys on something I call scenario analysis. You can look it up anywhere in the world. It does not exist. This is literally out of my PhD research, creating my own long-term strategy, long-term technical analysis strategy anyways, in any case. So I'll be giving you guys one of the first basic things that need to happen, like what your charts should always look like. We would obviously dive deeper into scenario analysis, but that's only for registered 365 students. Later on this year when we're now doing module 3. All right, so this is what we call proprietary research. The only people who know how to do this to the fullest are people I've taught. So, and that's right now, it's just currently 12 people on our trading floor. Real quick, the other builder of this particular video that I'm going to be doing with you is literally built up in a lot of the videos I've done on the channel. So you want to look at these type of videos where I was doing market openings. We're coming back to that kind of stuff. So this is really going to target day traders, all these market opening videos. All right. So I'm building up a layer on top of that. All of that is basically the foundations of my scenario analysis. So you would be wise to come back and rewatch this entire series. I think I did about 20 market openings, London session openings for you guys. And today we're going to do the same, right? While we're still on the channel, don't forget to like, subscribe. Let's get to 500 subscribers. I think we can do this, right? So I'm going to look at Euro USD. And I'm just gonna do one asset because this is the job. Like this is my new favorite thing to say. You know, one of my senior traders was complaining about 3 weeks ago about some stuff I sent back, and I wasn't happy with it. And I said, this is the job. And he was like, you're right. This is the job. The job is to analyze charts so that you can make money out of charts. And I'm going to be talking from the perspective of a day trader, even though this fully functionally applies to swing traders. So let's just quickly look at Euro USD. I am aware that today's NFP, I couldn't be bothered. I don't care. I've spoken a lot about NFP. I hope you're not here to get another NFP trade call. I've covered that in a couple of videos. In fact, after I'm done, an hour from now, I'll be hitting the greens. It's a beautiful sunny day in Grahamstown to play some golf. And then at 4 p.m., I've got therapy, so I actually won't be live on the charts when NFP drops. I really don't care about, slow pace of volatility. And today you're going to see what I mean if you know your assets. Right? I'm just trying to find a clean a chart that I can remove. Oh, man, I wanna keep all these markings. Just give me a second. I will find one broker who I don't care about. Right. So let's come here. I'm going to go to Euro USD. I'm going to go on the weekly time frame. Right. Well, I just give you quickly give you like a structure. We get an understanding of structure from where price is going, basically based on where price is coming from. All right. And I think everybody who generally is already subscribed to the channel knows this about how we trade supply and demand, smart money concepts at 365. So let's say for a second there we've got a strong demand. Whether it's strong or not doesn't really matter. Let's try and give it some life and draw it correctly. Then we've got the 2020 COVID. So finally we can now say there's a little bit of strength in Euro USD. Euro USD is now going up. We know this, everybody knows this, right? Because the dollar is falling, etc., right? But remember, I believe this is going to be very short-lived. It's not the Euro USD rebound that I think long-term Euro is going to see more downside, right? So now I'm just drawing some zones. I'm drawing some zones so I understand how big the field is. With the journey, I want to understand the journey. Markets leave a demand, markets got to go to a supply. Markets leave a supply, they have to go to a demand. I'm going to move to the weekly time frame as quickly as possible because that's really what I'm interested in for my scenario analysis, right? Remember, timing in the market is very crucial. Some people see buy trends while other people see sell trends, and it's always based on the timing of what they're looking at, right? So on the weekly time frame, I've moved that monthly supply, all right, and I've actually now gotten to a place where I've narrowed down a weekly supply, which is going to happen a whole lot sooner, All right, so now I can make this argument. Euro USD today is strong temporarily and moving to the upside. I should expect weakness in Euro USD maybe halfway into the month of June. All right, why? Because that's the first time we'll make contact with a strong, valuable weekly supply, which then goes to say I should probably be looking for some longs on Euro USD. The euro today is NFP, blah, blah, blah. Well, let's see what the data says. But right now, there's a lot of room to go up. To be very, very specific, Euro USD could keep going up for another almost 200 pips. All right, almost 200 pips. Cool. I now know this about Euro USD. I move down to the days. This is our basic war room stuff. All right, guys, this is nothing new to you guys, right? So we can then draw a couple of things. This is interesting. With a Talitha area, it got properly tagged, properly tagged. In fact, it got tagged and most likely broken, right? As markets, okay, given the green wick here, this green wick there, make this big for you guys. If you can't say anything, if you can't hear me, shake my hand, Trevor. Good to see you, brother. Good to see everybody. I don't know who's online right now. I know I randomly decided to go live, but I was doing this by myself and I thought, no, man, let me just share this information. Right. In my humble opinion, that daily supply is broken. You can see, you know, that red wick there. I don't know if this is clear to you guys. It's very clear to me. And because I'm sharing the screen, I'm assuming it's been shared quite clearly, but just in case it's not, there you go. The Talitha area supply was broken right there, so we can remove this. It's pointless to us, right? So markets then try to make a play for some higher, you know, weekly, you know, touch, right? But when we do a multiple time frame analysis on Euro USD, and our assumption is there isn't a strong supply here, there's going to be a memory of a supply. I don't even want to get into that kind of stuff, right? Memory of supply talks to trading psychology of traders. Traders believe that markets have a market memory, and that when price comes to an area, sometimes a support or resistance, that behavior might play out. So let's call that a memory, but it's not really a supply, because our strategy tells us once a supply is broken, we move on. So now if we do a multiple time frame analysis and we're now breaking down that weekly supply into the daily supply, we can then make the argument that inside the weekly, there's actually a better daily supply somewhere inside this wick here. See the thing that we just drew there? Right, so then I can then tighten this a little bit to look like that, even though I know that there's an area of competition. And look what it will look like on the daily time frame. Sorry. All right, it won't make sense. There's nothing for me to trade there. So I'm now going to delete the weekly. I'm going to be left with a daily area of value to look like this. So me being me, right, the first time, the next time I even want to consider selling Euro USD would be somewhere up there, right? So we've just kind of like quickly done a basic breakdown of a three-stage multiple time frame analysis. Now I'm looking at break of market structure. You see this nice doji candlestick was broken by a strong supply. Then the Talitha areas gathered below right there, creating equal highs. I'm just rushing through concepts because what I want to do with you is more important, right? Equal highs. So it makes sense that there are multiple rejections here after price broke structure and went to the downside. What can we expect, you know, in the short term? Short term is hours to days, right? Friday, Monday, Tuesday, we can expect some activity here, right? Markets might play mind games, markets might come down, markets might not. This might become a nice clean place for liquidity, which is what I would anticipate. I would anticipate that there are many traders around the world who think they're smart, and maybe they are smart, and they're going to try and sell here. And I'm going to assume that because they want to sell there, like markets are going to assume the exact same thing. People who don't trade by our rules, that all this whole area here is going to be where their stop losses are. What are stop losses? Stop losses is the money you want to sacrifice from your bank account. It is your leverage. It is saying, I'm going to make $1 million in this trade, but I want to risk 100. Obviously, those numbers don't make sense. To you, it's called a stop loss. To every single other trader on the opposite side of that trade, especially smart money, it's called liquidity. We're going to take your money, your stop loss, stop you out of your position and drive price with your money where we want. But I only have $100 there. Yes, you and the 1 billion fools trading like this makes it $100 times a billion, which is a lot of money, probably $1 trillion. I don't know. Right. So my point is just watch out. No, don't be part of liquidity there. But that area there is there. My understanding of the chart in front of me is actually prefer for price to break through here, grab liquidity, punish everybody who was trying to anticipate an earlier sell and wait to sell high. Patience pays. Right. So now I know this about my bigger structures. I know there is a daily demand, a daily supply, I apologize. I know there's a strong demand at the bottom. There are several daily demands that we can draw on this chart. And price is hanging in the middle of nowhere, an hour to 2 hour, 30 minutes just before NFP. Markets are just playing mind games. That's how I know that today a lot of people are going to cry, right? They're going to cry because they don't want to wait for the data because someone told them not to do that. Don't know who, but that's just dumb. Right, so I'm moving now to my day chart. This is literally where I would mark up my swing trades, blah, blah, blah. My day chart as a day trader, if I was a day trader, I've taught you guys on this many times. I've asked you guys many times to do this so your charts look like this all the time. On the 1 hour time frame, you can see the white lines represent that weekly supply that we first drew, that break of market structure over here that I just taught on, the liquidity grab that I anticipate up there. This is now a new thing I'm adding. The second white line just represents that market memory, the idea that this Talitha supply was broken by this point, which is correct. Remember, we saw that price did break that supply. I zoomed in for you on the daily time frame, and I showed you that this Talitha area, if you don't know what that means, register for the course, register quickly, do it now, right? But I can't explain stuff. This module 1 basic stuff that I've taught on a lot, right? So this supply here was broken by this week. I've drawn this line here as market memory because there is a possibility that someone is going to see it as a place of selling. I'm not talking about the liquidity grab there. I'm talking about the possibility that price created a new supply. Do you guys see that? We have a Talitha area that was broken. I don't trust these type of supplies, but they do exist. And then markets all of a sudden bandage an area of value, reinforce an area of value. And why is there a long wick here? Because there are so many buyers pushing price up. Well, why didn't price go any further? Because markets sold against those buyers. And look at that imbalance. Would you ignore such an imbalance? I wouldn't. I don't want to sell here. I've already told you I want to sell somewhere up there, but I am aware of it, right? So then that tells me now that between where price is right now at this recording, there is now 84 pips distance between this first selling point. I could sell here. I could take a risk. Definitely, there's nothing wrong with that. I'm just breaking down what I'm seeing, all right? Hope we're all together so far, because now I'm going to slow down, right? So I was just giving you guys where Euro USD is. So now I want to do what I call scenario analysis. Scenario analysis is really the bread and butter of a serious day trader. You got to know your assets, and it's a lot of work. All right, that's why I never do it in war rooms, because it takes time. And I'm hoping to do 1 month of Euro USD with you in under an hour during this live. All right, I don't want to get to the fair at at 2 p.m. It gets a bit crowded there, right? I want to start teeing off at about 1:30, but I think we can do it, right? So I'm just going to switch to the 1 hour time frame. Remember my lines. These little vertical lines are simply marking London session. I'm a London session trader. I trade London and New York, but I like London more. I'm a morning person, maybe. That's why. Right, so these vertical lines all tick off at 9 a.m. on every single trading day, right? 9 a.m., that's when the London markets open. And those of you who attended my market morning sessions, you understand this. This green zone here, this whole green zone, is that demand that we drew right earlier on when we're marking out the governing demand, and then we drew the weekly demand. It's just this line. This is the green. That's all it is. It's just where did price immediately stop falling, eventually stop falling. Okay, price stopped falling there. Weekly time frame, that's the green zone. Daily time frames, the same green zone. I haven't even bothered to articulate all the other different demands there. All right, I don't care for that right now. Now, in scenario analysis, scenario analysis is basically, and the way I argue it, is basically building an intimate relationship with each asset. You want to know, right? Those of you in long-term relationships, married, not married, live-in partners, whatever it is, we've been with somebody for at least 3 to 4 years. Even though you love them, there are things that you now know about them that allow you to breathe a little bit, get back at them, annoy them just a little bit when they're annoying you. That's all scenario analysis is, an intimate knowing of the pair. We are going to start at the beginning, of the previous month. The previous month right now that we just finished right now is the month of May. Right, today is the 3rd of June. We are expecting NFP today. So today is the 3rd of June. So we're going to start from the beginning of May. It seems to me that somewhere here, right, on the 29th of April and somewhere in this entire cluster, May started, right? So the 2nd of May started. So this probably was like a Friday, Saturday, Sunday, and then markets through the Asian session on the 2nd of May, 1st of May started to formulate in here. All right, so I am simply just drawing my vertical lines one more time, 9 a.m. to 9 a.m. The first thing I want to do is I'm going to do a couple of things with you. We're going to build a narrative. We're going to quickly back test. We're going to do a scenario analysis. We're going to need a calculator sometimes, and we're going to be drawing zones along the way. All right. If I miss a zone, you forgive me. I am rushing, but otherwise you can redo it later on. I'm just going to give you guys the tools to do this correctly. Right. So maybe it's too early to even draw this supply. I was starting, and then I thought, nah, man, let me get everybody on board and just do a live here real quick. Right. So markets are not random, and I can't emphasize that, enough. Right, human beings are random. Right, so somewhere in here we know is the 1st of May. So we're just going to look at this cluster, 9 a.m. to 9 a.m. Remember, I'm a day trader, so I'm studying the flow of money every single day in a 24-hour period. I want to see if I am literally in an advantage when I'm applying supply and demand, smart money concepts, and how the markets actually flow. In this short video, we're going to look at 30 days. I would suggest you go back in time and back test the living daylights out of this and choose 6 assets that you just study. You just draw all these things. You keep going for it. You make notes because it will help you. Remember, okay, we'll come to that stuff later on. Right, so I'm going to quickly look left just for the sake of it and see what's the nearest thing to me. See, on the 27th of April, there was something weird there, right? On the 27th of April, there was a supply. Was this a supply on the 1-hour time frame? Yes, it is. It meets the imbalance rule. We've got a bearish engulfing pattern. We've got a 365 candle. We've got a lot of things going on here. This is definitely, undeniably a supply. Is price coming down earlier on? Absolutely. So it's a continuation of a downtrend. Right, so when we get to where we are starting on the 1st of May, you can see my 9 a.m. tab here, right, on the last day of the month of April, markets contact as supply. Okay, not crazy, not voodoo, simple maths. And then markets go down. So all I want to do in my scenario analysis, because I want to understand Euro USD, is I'm going to take price from the highest point of that week to the lowest point on the chart there. Right, that's all I'm doing. I'm dragging it from the highest point to the lowest point. So how did price open in the month of May? And I can see on that day, on that trading day, Euro USD moving up and down, eventually moved 83 pips. Euro USD eventually moved 83 pips. Because it's me and I like data, I'm going to write it there. I want to know something. I want to know the average distance price moves a day on Euro USD, because this is going to help me set realistic profit targets. Some of you guys never reach your profit targets because you think that is called a version of swing. Swing trading, yes, the targets are far away, but the targets are far away based on the structure in front of you. So now as a day trader, I've got something interesting here. I now know that on the first trading day of the month of May, there was some zigzagging in and out on that day, but price moved 83 pips. Had I waited here, I don't want to draw too many things, but on that day, had I just let price come back down, if you're trading, and markets would have triggered you at about 8 p.m. on the last day of April, and you would have rode this baby all the way to the lows inside this 24-hour period, and you'd have made some good money. On the following, which is now the 2nd of May, markets open with the bullish engulfing pattern. Why do I say open? 9 a.m. open is what I'm referring to. But then markets still kept moving to the downside. Why? How many times do we have contact on areas of value? You can see here at the opening of the 2nd of May now, markets came back to this lower supply that was started by the higher supply and moved down all the way down there again. I'm just trying to kind of gauge some movement. All right, so I see here the next day, markets moved about, say, 69 pips. That's all. That's all I care about. Thank you. I'm going to write that down. Yeah, and that's what today's video is going to be about. I'm going to get to a point at the end of the video if you stick around. But yes, this is what we're going to do day in, day out until we're done with the live stream. It's going to take us about 30 minutes, but it's well worth it. Right, a couple of things to note, right? As markets are coming down, making contact with supplies, these little pickinini 1 hour demands are being thrashed. Would you be on the wrong side of the trade? Would you be trying to buy here on the 1 hour time frame? If the answer is yes, because you've got a bullish engulfing pattern, it means two things are currently true about you. Number one, you haven't mastered my module 1, module 2. Module 3 is going to be a problem for you. Go back quickly and master module 1, module 2. Or number 2, you haven't even registered, so you don't even know what I'm talking about. There is no buying here because there is no confluence. There is no confluence because we just said the big green area is where most of the buying starts to occur, monthly, weekly, daily. We just literally mapped all of that, right? So anyone who was trying to buy there got burnt, but they didn't get burnt because supply and demand failed them. They got burnt because so far right now, they are currently not enabling themselves to, to be in a better position in the market. So I can't leave that red in my scenario analysis. It's going to give me poor data. I am currently only marking red things red when the rules are properly applied and markets still fail, right? You can see here, remember, there'll be multiple demands and supplies. We can't take all of them. We only take the ones that match our rules. But you can see here what markets are doing. I mean, you really can't ignore what markets are doing here. On the 28th of April, a very clean 1 hour demand is formed right there. You can see it creates the new low of the day. You can see markets come back there. And if you thought that was enough now for confluence to buy, yes, you will get burnt every now and again, or it will work for you. But real buys only start within the green zone after markets make price with the governing demand, mayoral demand, daily demand, etc., etc. Right, so we've got 83 pips, 69 pips, markets weathered down, and then somewhere here the next day, 9 a.m., another bullish engulfment opening. Right, so look at that there, bullish engulfment gets a retest. Markets find a new week low to match this bullish engulfing, which is inside a very confluence, strong buy area. You guys can see this. I'm not making this stuff up, right? There it is there. So markets come all the way in here, and then somewhere there at 12 p.m. on the 3rd of May, right? All during this cluster, they are loading buy orders for the day. You get an explosive bullish engulfing pattern that then runs for a while, right? So I'm just going to mark it there. I'm going to give that a green zone. It's not what we're here for, but let's just mark these areas as we go. We might as well just back test our strategy. What I am here for is this interesting phenomena that happens. Markets shoot up on the 3rd of May, 84 pips. Markets move up 84 pips. Oh, see, I already have it here. All right, it doesn't matter. Put a calculator there. 84 pips. Or 83, depending on how you draw it, but 84 to me, right? And then as soon as they move up 84 pips, they move into a 1 hour supply that exists, that's been tapped now, 1, 2, 3. If you've mastered module 1 and you've mastered module 2, you know you're playing with fire at this supply. That's number one. If you've mastered module 1 and module 2, you know that we have an active demand, governing demand that is now being engaged at the beginning of a new month, which is the 2nd of May. You know this. You saw now you're looking at markets bringing price down. They pumped it up 83 pips. Then they sold against everyone. Remember, guys, for us, retail traders, but I'm talking about the other retail traders, the stubborn ones who want to do what they want to do, looking for support and resistance. If I start drawing lines here, like this here, like that, if I start doing something silly like this, you will know for a fact that a lot of people thought that this was a retest, right, to the upside. Now, markets know this because Every single legit broker, even the scammy brokers, to get their scammy or their legit broker license, once you sign up for an account, to say you're new to the markets, you've seen some guy's video code Leroy, you want to learn how to trade, but you don't want to buy his course, you're going to do it yourself. The broker's like, amazing, well done. Here's some free educational content. Here's baby pips. This is what they teach you. Look at the stuff. Any single person who expected a bounce up here, market sold against them. Liquidity, right? So that stuff plays out on the 3rd, right? I'm just bringing that up to help you, right? Markets bounce on this 9 a.m. demand that was created, okay? So it went up 84 pips, then came back down all the way to end of day, about 66 pips. So here the whole movement was about 83. Here price moved down 69. Here it went up 84, but then came back down 66. Let's just quickly correct this, just make sure we're as accurate as possible. The 68.8, basically 69 pips. Is there something in our minds that is starting to go, okay, I think there's a pattern here? Within the first 3 days, right, I can now make an argument that, okay, it feels like to me that Euro USD has a range of pips it can move in. If I was to want to kind of like study it, up 84 pips, down 68 pips. So it's actually 68.8. So let's call that 69 pips. Right. So total movement for that particular day, 153 pips. I would not have been part of the down 69 pips. I'd have just been more of a buyer. Right. Markets didn't give me a chance to go up here because I needed this to first happen, then wait for markets to buy with me. All right. So I would have never been a part of this first movement anyways, because I would not have known it is going to happen until it has happened. And then I come wait for price to come to me. Basic, module 1, module 2. But now you've got your little movement for the 3rd of May. Keep it pushing. Right. So first touch is done, right? Markets then consolidate right there and play with you the following day. Again, 9 a.m. Again, opening at the previous bullish engulfment. Again, remembering that they have done playing mind games with retail traders here. Of course, there will be those ones, we know them. We can draw a line again, who are waiting for this line here, who think when markets get here today, because they burnt me yesterday when I was trying to buy here, I'm going to sell with the markets the next day. Of course, they will get burned. Why? Well, they don't want to join, whatever. Look, markets come back to this demand right there. Now, let's calculate how that day goes. And we're on day 4 here. This is literally the first week of May where NFP shows up that Friday. And it's an interesting NFP. And I think today's NFP is going to be an interesting NFP. Right, all the way to the top there, markets give us a very big, bold move, about 137 pips to the upside, like literally just shattering any hopes and dreams of selling. But markets have to make a very clear point. It's not just that they broke this obvious supply here. No, it's also the fact that they broke the previous April supply. The very, very first supply that triggered any type of selling. All right, so let's draw this previous supply correctly. You see this there? All the way up there, markets completely overshadow that, making a point that it's time to move on. Where would markets get the balls to do such a thing? Made contact with the demand. The directional flow of price is done from a top-down analysis. Right, so we said what? 137 pips to the upside, and then markets eventually make a slight downward movement for the close. So that puts it about 145 pips, right? So 137. I'm just going to move the calculator to the screen so you guys can see what I'm doing. But basically, it's 137 pips to the upside and a total of somewhere between about 45 pips to the downside. There we go. 137 up plus 45 pips. So there's a total movement that day of 182 pips. The difference, though, is 137 up, 45 pips down, takes us to about a 92 pip average movement during the day. But that's fine. I don't want to complicate stuff, right? Let's just keep it simple. Let's just talk about up and down in today's video. Up 137, down 45. God, I love my job, man. I absolutely love this. Today I was supposed to do a video on market psychology. I will do it this weekend for you. I felt this was so important given the I guess the anxiety in the markets when it comes to NFP, right? And the best way to beat, by the way, that type of anxiety is to stay away from it. Wait for the data, wait for pullbacks, trade it on Monday. It's that simple. Right, so next day, we're now on the 5th of May. Right, is there anything that we should draw or can draw? I'm talking about order blocks, I'm talking about supplies and demands. We've got a very nice high somewhere there. We've got a nice body. We do have some type of an imbalance, so we'll see how that reacts to how price reacts this later on into the future. So this is now. Oh, and by the way, I'm pretty sure the 4th of May with this type of movement, 137 pips. I'm pretty sure the 4th of May was a Wednesday. I'm pretty sure it was. Maybe I'm wrong. And if it is a Wednesday, that's when ADP dropped. I am not wrong. So ADP drops on the 4th of May, right? And that's a Wednesday. And all of a sudden, there's a lot of movement up. Now, what exactly happened? ADP would have dropped at about 2:30. So now let's look at the charts. Let's look for 2:30. So somewhere in here, between this red and green candle, that's when ADP data came. And then markets consolidated, right, for up until about 7 p.m. And just when people thought it was time to buy, so you can imagine if you had a terrible stop loss, you're buying here on the 50 minutes time frame, any stop losses here or even under this previous order blocks, markets hunt everyone down and then pump price up. If Euro USD is going up on ADP or NFP, it means on Wednesday ADP said it was a miss. All right, it means that particular Wednesday, and we're going to go back. It's scenario analysis. We got to create the data. We cannot be lazy. We got to see if I'm right. So ADP had a negative. ADP thought it was going to be two jobs, and they got one job. You know, it was a miss. But let's quickly find out. It shouldn't take us too much time. We're looking for the news calendar of the 4th of May. 4th of May. Come on, Forex calendar. All right, another back tap. This is 15th, 16th of May, and then one more. Right, so it should be, is it here or one more back tap? I don't know. Right, I think one more. There we go. Right, so now let's quickly go to the 4th of May and let's see what ADP was saying that day. Right, so Tuesday, Wednesday, there's ADP. Wednesday, where's ADP? Unemployment change in the morning, in the afternoon. There we go. 2:15, non-farm roll. There we go. See, it was a miss. The forecast was 382 jobs. They got a complete miss. And so because of that, the dollar fell and the euro went up. Did the euro go up at 2:15? No. No, it didn't. It actually started to fully react to that data at 8 p.m. And it didn't use any order block created at 2:15 or during the market volatility or whenever. It went back to the 9 a.m. market opening of the previous day. That's important. That's important for anyone who really wants to trade news events, high volatile events, and thinks that the news event or the high volatile event is the event. The event is actually just a catalyst to where we want to be in the markets, and markets will always go back to their order blocks. Anyways, that particular Wednesday where ADP messes up or it's a miss, right, there's a big push to the upside, 137 pips, markets start to fluctuate down. And then the very next day, which is Thursday, because markets started to fall the previous day, markets to me create another supply as far as I can see. I'm just going to extend it to about 2 to 3 days to the right, and we see what happens. And then price started to move to the downside. Markets literally move all the way to the downside. So full day to the market close, to the lowest point of the day, and markets move down about 117 pips. That's awesome. I'm going to take notes of that. So all of a sudden, yesterday's news doesn't matter. Markets have literally come back to potentially lower places than they were the day before. So that's 117 pips movement right here. I'm going to write that down. 117 pips. It is helping you like the video. If you're completely bored because no one is giving you signals, I'm sorry. You know, have a good Friday, have a good weekend. But if it's helping you, do like. Right, and here we are now. Next day, the same supply that we mapped out at the opening at 9 a.m. I'm going to keep emphasizing this. The very same supply at the opening at 9 a.m. Literally, then markets tag it. Just excuse me for 2 seconds. Background noise that's annoying me. I apologize. I'm right here with you. Just 2 seconds, please. Right. My check. Sorry about that. Right. So I was saying markets then come back to the exact same supply. I'm just placing the mic again. Right here. Right. But it's the 9 a.m. supply the previous day. That's important, right? But markets explode, like get some green back, collect some buy orders. I'm doing this on the 1 hour time frame, but remember, markets keep making contact with a deeper, stronger demand. Right, markets make a big move to the upside in that market opening, move up about 107 pips first, right? Move up 107 pips, and then on the same day. And by the way, if you start to draw in a different color lines of the New York session, so you'll be looking at about 2:30 to 3 p.m., you will notice that if London session guys push up, 3 p.m. guys are going to come back and push the markets down. You went up 100 pips, we want something equally the same for ourselves, right? So, and it's just kind of like the back and forth, right? So it goes up 107 and then comes back down 91 pips. I'm going to make a note of that. And this is interesting. Oh, okay, cool. So now look at this. ADP gets it wrong on Wednesday, on the 4th. And now we're analyzing Friday, the day where NFP comes out. And NFP is like, I don't know what crack, ADP guys are smoking, but we found 428,000 jobs versus the 390 we were looking at. And so now we've got a reverse effect. The same dollar that had to be weak on Wednesday because ADP was negative is now the same dollar at the opening of the New York session that's very strong, and hence euro falls, right? Falls, okay? For a day trader, this is important. For a swing trader, I don't care, but I really hope this is helping. It actually is important for everyone. So up here, I'm going to write NFP is technically positive. Markets go up 107 pips in the morning, right? So London session guys try to push price up 107 pips, but then markets come back down but 91 pips, if I'm not mistaken. Yeah, 91 pips, that's correct. And then, price continues down. Now, let's make sure we haven't lost out on any order blocks. Do I have an imbalance here? 365 traders, not the best. There's an impulse, yes, but I don't have the best because I don't want to count something that's already made contact with the supply. But it seems to me that markets did not care about what I want, so they use it anyways. The very following day, I'm not going to draw it because it doesn't match my rules. But I do know that when markets closed and started a whole new day right there, if you zoom in there, we've got a bullish engulfing pattern again. A bullish engulfing pattern doesn't look convincing until you zoom in right there. And then this one is just a non-debatable, right? So we've got some very strong, some buy momentum, probably the Monday after, markets are just done, figuring out what the hell happened with ADP and NFP, which is where we're all going to be next week, Monday, right? So this is what you need to kind of like start preparing for right now. Not what's going to happen in a few hours from now, but what markets are going to do for the rest of the month, because a tone is always set, right? So markets open at 9 a.m., positive, shoot up again to the exact same supply, all right? This time, because it starts a little bit higher, not as low as before, the movement is only up 96 pips. Why did price stop there? Well, look to the left. There's an order block. It's all there, all there. It's always all there. Right, as quickly as possible. I feel like I've spent so much time and I've just done 5 days. Upside, 96 pips, if I'm not mistaken. And this is what I expect to see in most of my floor traders charts, because trading, guys, you don't get into trouble, and I want to be very clear, like even we had a situation in our public Telegram group where I felt like some people were not being, were being disingenuous, right? The point isn't we want you to be right all the time. That's impossible. The point is you must have a system that tells you why you are wrong so you can learn from it, right? You're never going to be right all the time, but you must have some type of understanding, a system that we can all understand as to why we're right or wrong, right? And then markets make contact, kind of consolidate sideways. There's really no point in even trying to figure out how many pips movement that is, like about 30 something pips. But the point is it's a consolidation of the other side up until a sideways movement to the next day. The next day, markets then open with a bearish engulfing pattern, right? Can you see? So for me, we keep making contact here with the demand, but price is struggling for the most part. And remember, just a few, I mean, this is now the 10th of May. Just a few days ago, NFP just came out, right? It's just been 1 week since NFP came out and said there were 400 jobs. So obviously the dollar is strong. So this week after NFP, on the 10th of May, right, price was struggling to break above. Okay, so this is quite evident on the 1 hour time frame. We're stopped by this supply. Now we've got another lower supply. And what price is going to keep doing, oh my goodness, what have I done? What price is going to keep doing is price is going to keep pushing price down. But to where? Good day trader would know where, right? Fresh demand. Maybe this could have been considered a tag. It would have tagged your area of competition, but your order block is, slightly intact. There it is. Markets make contact. Markets go all the way back to this weird supply. Why is it weird? Well, consolidation on it, I don't like. Very deep penetration of the supply, I don't like. Because of how much time and money was spent penetrating that supply, markets don't go all the way down. In fact, they rotate back up, right? They're playing around with someone. And then markets eventually start to come down into a demand, shoot back up into that same supply to completely weaken it, right? And so where are we? All right, so we need to do these 2 days, right? So this for me is interesting because then markets pretty much open and close where they started, right? But for us to look at the highest point of the day up until I get to the lowest point of the day, this was a very short 34-day pip movement. And you'll see traders want to trade every day. Even this sort of wanted to kind of like buy and sell. And to me, this would have been a no trade day. If I didn't get a clear contact, it would have been a no trade day. I would have had a pending order waiting for me down there. And my profit target, my TP, would always be the immediate order block in front of me. Even if I assume it's weak, right? You never want to use your own money to break an area of value. Let the banks do that, right? So the next day, markets then open at the same supply and then drive price down to the demand, moving down about 73 pips, okay? In fact, there's no point in doing what we're doing. Let's go all the way to the end of the day because markets never come back up. Right, so it's a full day and markets move downwards 77 pips, right? Tearing down that demand that is now being used, 77 pips to the downside. Guys, those who are, is this helping you? Anyone? Because my partner told me that the problem with me is I thoroughly enjoy what I enjoy. And I'm never sure if other people do. And it doesn't really matter to me, but what I do want is less of enjoyment, but really more of is it helpful? Because I was going to do this by myself, but I'm really hoping we can get to a point where we can tie all this data together before 1:30 p.m. Right, so markets then break through the demand, and this is the trap, right? Remember, you know that anything green here is real money. It's cash dollar governing demand money, all right? At 9 a.m. the very next day, you cannot ignore the fact that markets create something like this. But there's a high chance it's not going to work. Why? It's literally a 1 hour supply in a governing demand, mayoral, weekly demand, a daily demand. But you can draw it because remember, on this day when it was happening on the 12th of May, you didn't even know when price was going to come. In fact, I'm pretty sure I thoroughly believed markets were potentially going to remove this whole daily demand. So you have to draw it because at that moment when it happens, it's definitely important, all right? Then markets continue, which means, by the way, that the dollar at this particular time is picking up a lot of pace. The dollar is going to the moon. If I pull up the DXY and I go to the 12th of May on the 1 hour H4 daily, you are going to see just green, green, green. Somebody say do it. In my head. So let's do it. Let's just quickly prove a point because you need to understand the inverse relationship. So I'm going to find the 12th of May. Where is the 12th of May? This is my DXY chart. There we go. So I'm on the 1 hour time frame. I want to quickly see a big picture. Let's go to the daily just to see. Like, and the reason why I'm doing this is because you really have to understand your assets. Yes, your order blocks matter, but the time around your order blocks is also important. Outside of the order blocks, the confluence that affects the order blocks is important. And then obviously the relationship of currencies is important sometimes, right? So I'm looking for the 12th of May because that's where we are. So look at this. A beautiful for drop here. Remember ADP on the 4th of May. Where's the 4th of May? Look at that. ADP creates a supply on the dollar. And then 4th of May is Wednesday. 5th, Friday, NFP happens. This is so good. I don't know if you feel like that, but I'm so happy to be doing this. Right, so I just want to get the date. So the 6th of May is when we have non-farm payroll, NFP. So let's go to the 6th of May because this is interesting. NFP on the 6th of May is positive. Don't be fooled. Remember, we always say if it's positive, it's good for the dollar, and that's true. But a lot of people get the timing wrong because they base it on fundamentals only and never check structure. Look at the 6th of May. The 6th of May price is still hung over ADP results, such that when NFP drops on the 6th of May, the dollar still falls. The dollar, be careful of that today. That's why I always say, wait for the data and then balance it up. The movement of the data is coming. Look at the payday. The payday where the dollar goes, goodness gracious, those were good job numbers, only starts on the 9th and the 10th of May. Only starts on the 9th and the 10th of May, not the Friday of NFP, but the Monday and the Tuesday when I will be refreshed next week, seen my therapist, played my golf, played with my kids over the weekend, very chilled, stress-free. That's when the big move comes. On the day NFP is positive, the dollar was still busy trying to construct a value-based demand on the daily time frame. Only on the 9th and the 10th is when we rock, right? So you can see the inverse correlation there. I don't want to get hung up on the dollar because if I do, we'll be there forever. Right, so let's go back to what we're doing on the 1 hour time frame, and I think we're at about the 9th or the 10th of May as well anyways. And then let's just quickly catch up with price. So there was that big bearish engulfing pattern somewhere that had just been created. What's going on? Where's the price? There we go. I'm just a little bit confused. Give me 2 seconds to reorientate myself. Right, so we're somewhere here. So look at this, guys. This is the 12th of May. We just proved that on DXY, markets start to move crazy to the upside on the 9th, somewhere here, right? The 9th, this moment here, and the 10th, that Monday and Tuesday. And that's when Euro USD stops to mess around. This is when they finally give us what? No movement. Was this not the 30-something pip day? Yeah, 34 pips day. And then after that, you just see Euro just can't handle it, right? It starts to fall, yes, big time, right, while dollar goes up. Okay, so now we're finally here. Markets then open with a bearish engulfing pattern, the 1 hour time frame. And I'm pretty sure you might have been lucky to get retests. Otherwise, you might not have been lucky, and markets just move to the downside, right? So markets shoot straight down for 162 pips, right? And then this is kind of like where they close. So, you know, if you work out the difference between how much they went up, how much they went down, we can call it about 122.25 day pip movement, but to the downside, right? So markets move 125 pips to the downside on this particular day. And then we're just going to quickly draw some important areas of value, right? Literally, you know, as a trader, when I get this type of information, I now know what to expect from Euro USD. I am not looking to expect more than 60 pips sometimes, right? Which means my order blocks must kind of like correlate that type of data, right? But anyways, we'll get to that. I already said, you know, it would have been a suicide mission to take the sell. Who sells inside a big governing area? But the sell, we can draw it, right? But you can see it was such a, you know, a prolific waste of time. And it's not because supply and demand didn't work. It's because markets right now are inside a buy zone, right? So they sell as deeply as they can into the buy zone, create a double bottom of sorts, right? They actually break it. Don't forget this when price comes back here. And then markets then open, right, literally take a quick nosedive, 62 pips, right to the downside, and then eventually consolidate for the rest of the day, and then it's basically a non-movement. If you look at the highest point of the day and the lowest point of the day, right, which is literally what happened here, the lowest point being about New York session at 3 o'clock up until midnight, or the following day rather, markets only moved about 62 pips, 61 pips, either distance, because a lot of it was spent consolidating, right? So I'm just going to write here 61 pips, and there would be more notes if I was to refine this. I'd have to talk about how consolidation phase, failed supplies. Like if I was really doing a full scenario analysis, I'd have to know that because DXY is doing this, this is going to do that. At 9 a.m. the very next day, markets seemingly, every time there's a consolidation, guys, a range, it's like markets are campaigning, right? Markets are rallying up someone. Either they're rallying up a lot of sellers, rallying up a lot of buyers, right? One of the two things is happening, because at some point a movement must take place, right? The very next day, you know, markets kind of like start to slowly gain momentum, but we're still stuck. We're not getting those explosive ranges now. It's just now a normal trading day, I assume. No big sentiment, blah, blah, blah. Markets only move 60 pips on that day, but slowly but surely to the upside, trying to climb out of that demand. I'm still stuck on my 9 a.m. market opens because they're important to me. The very next day, markets give me a strong bullish engulfing pattern inside a governing demand, right? I like that a lot about it. Markets move a little bit the very next day to the upside, about 90 something pips. Let's just delete this old one. Right, what did I do now? Right, move up 90 something pips, and then markets then come crashing down. If I can just remove this and then draw a new one, you know, they equalize it a little bit to the very next day, 60 something pips, right? In my humble opinion, this is one of those charts trades that would not have triggered me on time, because I don't think I would have drawn my area of value any higher than it needed to be. All right, so markets use the governing points proximal line. Remember, this outer green boundary here is the monthly governing chart. And this is just one of those unfortunate things, you know, markets would have definitely left me behind, because my entry point would have been somewhere there. Oh, it actually came in quite deeply. All right, never mind. Yeah, maybe I'd have been triggered, but I doubt it. I mean, I never enter on top of a zone, but my proximal lines are never that far away from the zone, right? So that would have been a thing somewhere there. So most likely would have been missed. That's fine. Markets then move up the following day, but let's just quickly put in our data for this day, which I've already forgotten. I apologize. Right, so what did we say? So we said we opened up somewhere here and we moved up about 90 something, 91, and then we moved down about the closest somewhere there, about 44 pips. So we had a 91 movement to the upside. And did I close my calculator? I'm so lazy. Lazy. By the way, if you guys are still on that buy with me on Bitcoin, break even. We don't know what's going to happen today. Take profits, exit, you know, do something about that position. Don't just watch it, you know, do something about it. If you're with me on Bitcoin, I don't even know where price is right now. I checked it at 7 a.m. and I thought I was going to post it on the public Telegram group, and I posted other things, but I completely forgot. I mean, really, guys, remember, I'm just a market educator. Signals is not really what I like to do. That's why I don't charge for them. But you can't wait for me, because I'll never forget to protect myself with my own money. But like, my point is to give you guys the tools, and then you know what to do, right? So we spoke about a couple of buys, Nasdaq, US30, blah blah blah, and you can already see markets are terrified, right? They're like, what the hell just happened? ADP happened, yada 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 yada, right? So just think about what happened yesterday with US30. I know I digress. US30 were in good buys. We got to about 1:2.7, almost 1:3. US30 then came back down, swish, took us all out. If you were not careful, you might have even made a loss, and then all of a sudden created a very strong upward movement all in the same day, right? And if this is just going to be dependent on the data, right? This is going to be dependent on the data. But yeah, buy one for me, I broke even. Buy two, I took profits, and I just left it. That's why I exited somewhere there a while back, right? And then all of a sudden, markets are scared. But I've got one big position here, but it's on break even, so I could be zeroed out. I could make $0 on it. I don't know. It's up to you. But just be mindful. This is a reaction to, just before the data drops. And we've spoken about this, right? We've spoken about how day traders, or most traders, generally speaking, will have at least, sorry, wrong chart, 3 positions. You break up your risk into 3 positions. You got take profit 1, take profit 2, take the third position, the buy or the sell. You always break even and see if you can turn it into a swing, right? I've taught those videos that I showed you guys on the YouTube channel. I've explained that many times, many times, why that's important. We're almost done, guys. We're almost done. Right now, what's interesting to note is it is now the 18th of May, and for the first time, I, Leroy James Myceri, cannot fundamentally tell you why a order block that is rule-based failed. But I, Leroy James Myceri, can tell you that in the 18 days of trading, you have one area of value that has failed you so far. 18 days, or well, minus weekends, right? That is incredible. You have not been faked out. You have not been caught out. You literally had order block upon order block do its job throughout the month of May until we got here. So it means that markets definitely use this as a spring. Me personally, I would not have been triggered. I was honest about that. But I don't know why else markets drove through this zone, right? And you can see where markets landed is a bit awkward, right? You could throw in some Fibonacci's. So you would have been a trader the day before, looked at the market low, looked at the market high for the next day. Remember, anti-fib must come and help us make sense, right? 50% mark there. That's why markets turned there. Sure, you have the golden ratio. Markets didn't like it. Markets broke below it. Markets stopped here at that what we call the barcode level, right? It's fine. I would have lost money if I took this buy. But out of all the buys and sells that have been value-based peak supplies, or basically rule-based supply and demands, my first loss of trading Euro USD. Come on, man. I don't know. If people tell me how best to communicate this information to them so that they can make money, I will gladly adjust just to press it upon you. Right. So we finally have this where markets drive price a little bit lower on the down. We don't know. Maybe it's sentiment. Maybe I'm even too quick to prosecute my rules. Maybe market sentiment changed. Maybe Putin did something. I wouldn't even remember, right? We've had a lot of weird sentimental drive since this whole year. Anyways, markets dropped 76 pips on that day, taking out a demand, and then kind of like rotate up 30 something pips, but then eventually close somewhere there, right? So I'm just going to take the lowest point and the highest point of the day just to wrap it up and say price on average moved about 167 pips. I'm also going to quickly make a couple of notes here on the 1 hour time frame. The first sign, maybe if I was paying attention, if I was really good at my scenario analysis to realize why or if that order block was going to survive, was going to be one, supply, and the fact that the London market opened with the supply. All right, you can see there, strong supply, markets make contact with that supply, markets break the supply, right, thinning out the liquidity, somewhere their stop loss hits, sure, potentially, and then use all that money, all the liquidity just above this area, but we know there's a downside pressure, and just flash the euro for the day. All right, and we know this is happening because the dollar on the other side is having the time of its life, right? So we say 67, 66 pips. I don't remember, but I'm just gonna wrap it up to something like that, and then I'm gonna keep it pushing, right? So we've got a supply upon a supply here, and then markets find a low. When markets find this low, if you look very carefully, because these guys are not gonna just close the trade and then go home, right? Institutional traders, by the way, when I was on the floor, one of the most fascinating things was the last hour of a trading day has nothing to do with trading for these guys. They are just building orders for the next day. They're going to be the first people in the morning. As an analyst for Alan Gray, I had to be there at 6:30 a.m. By contract, I had to be there at 7:30 in the morning. But the traders, the two senior traders I was attached to, who wanted to know market wrap-up, market news, give us the data, because that was like my job. I was under them, would get to work at about 8 a.m. and I needed to be prepared. These guys, before they went to sleep, would have already stacked the order flows for the previous day. And you can see how that starts to play in, right? So there we go with the Asian session. Markets create a new type of demand, right? Nice and tight. After breaking this one, another one right here, all right? But between the two, what do the rules say? Some of your stop loss hits have nothing to do with the market and everything to do with you. What do the rules say? I'm just going to remove my 9 a.m. line here so you can see for sure I'm not making it up. Markets literally come back. They will come back. They will come back. And this week here where markets come back, don't forget, is 9 a.m. Look at this. It's 9 a.m. It's the London session open. It's 9 a.m. Right. So markets drive into there. All right. If I'm not discouraged by the one loss I've taken in the first 18 days of the month of May, trading one asset, if you just mastered one asset, if you did this for just one asset and gave yourself 3 months of just operationalizing this knowledge, your account would see more growth than everything you're doing that you've been doing for the last 3 to 4 months. And I'm trying to show that to you, right? Anyways, markets explode. This 18 May, yeah, that's correct. Markets explode and it looks like they really explode. We've already spoken about how this supply was broken. We've already spoken about how this supply was broken right there, taking out liquidity before driving price down. Then I expect, you know, and I really do expect this, that there is not a single registered 365 student who would be looking to sell here. The breaking of this supply would be the very type of communication to say, today is going to be a big green day. What's going to stop price from this demand? It's not going to be this supply. It's going to be a green day. In fact, if you're a day trader, I would suspect that your take profit target is somewhere here because you're like, okay, I don't know about this supply. This supply looks serious, but this one I know is broken. And so we have that big day on the 19th of May. And if you look on the charts on the DXY, you'll start to see DXY now is starting to correlately fail, right? We're now hitting supplies on the dollar. So now euro strength is back. Where is euro strength coming from? Deep down in the belly of the governing demand. Remember, we'll have forgotten about all of this governing stuff because we're trading on the 1 hour time frame. That same day, let's say you lost your $10 trading here. Look at how markets gave back. Literally incredible give back, right? So markets push forward to about 141 pips and then kind of like move down a little bit. But let's just from the low of the day for the 24-hour period to the next day, let's say markets moved about 109 pips overall to the upside. I think I'm going to make it in time. This is brilliant, right? Because we're almost done with the month anyways, right? And then the next final day, 9 a.m., there's nothing that you can do there. You're not in a rush to trade because it's 9 a.m. What you want to do is you want to mark up your areas of value in relation to the rules you've built. When markets were building up momentum the previous day, breaking supplies, here's the order block and the area of competition for that order block that did just that. So if you're a swing trader, hello, you bought here, maybe at 1 or 2 or 3 entries. After dividing those entries equally to your risk, your first target definitely was here because remember, there is no supply here. It's already been broken. Target 1 hit. You banked some money. You made some money that day. You break even. Target 2 and target 3, maybe you're going to swing them. When price starts to fall here, I know traders, emotionally, trading psychology is out of control. At 7, 8 o'clock, they're like, I'm seeing too many red candles. Most of you have closed your second trade there. That's fine. You've made 2 good trades. Don't forget the third entry, let it run, let it flow, build. So now you've got 1 swing trade going. I don't know what you have from the other days, but let's use this example. 1 swing trade going, and you know for a fact that the next best entry in the market is this one. Why? Because your rules tell you that. They tell you to look at the imbalance. They tell you to look at relative strength, breaking of supplies. That's strong. That's a good demand. Where is it coming from? It's coming from the governor. It seems like euro wants to gain strength again. You're not going to buy at 9 a.m. You're not going to do that. You're going to look at the order, at the structure. You're not going to just trade NFP randomly an hour from now. You're going to look at the structure. We're about to get to today's structure. Right, markets take off again in that particular moment, right? So first they come back down. You can see here there's the makings of a weak supply. So like Leroy, what's the difference between a weak supply and a strong supply? As usual, master, module 1, module 2. We talk about the imbalances. There are specific imbalances that we like. Right, so and number 2, we also talk about our areas of values being tested. Number 3, we talk about don't trade like a drunkard. There's no supply here. You can see that it gets smoked eventually. It was always going to get smoked. Right, so your entry for this new day is somewhere down here as a buyer. I would be a buyer for the day. I would not be a seller. I just explained that 48 hours ago, you saw these valuable supplies being taken out in front of you. Markets rotate to the upside, markets come back down. Now let's see. So high point drops to about 64 pips, which is normal. It's a normal range for pound, and then goes up again 70 something pips the next day. Why do I keep closing my calculator? I know it's 130 pips, but I just want to have my calculator open somewhere. Right, so we've got 70 plus 64. Right, should give us about 130 something, right? 134 pips, right? And I close it. It's me who keeps closing it. No, it's almost automatic. Okay, so then we've got this situation here, 134 pips. Man, I just realized that the driver is going to come quickly in 20 minutes to drop off my boy. So I might have to kill the stream then when because I have to go, yeah, talk to him about his day, blah, blah, blah. Imagine coming home and no one cares about how your day was. Right, but we're almost done, we're almost done. And then I have to take off for golf. Right, now at 9 a.m., look at this beautiful order block, right? Very strong continuation in the markets. Markets are like, yeah, man, we are back. Euro opens very strong. I'm now on the 23rd of May. So this is now last week. We're already at last week. Just want to separate the two. There used to be a supply here, then it got broken. Now I'm talking about a demand. And this is going to become very important in your module 3. Markets like using what we call flip zones. A broken supply sometimes can be rebandaged into a powerful demand, right? And I hate flip zones personally, but they are profitable. Just because I hate something doesn't mean you can't use it. I hate it because I've been trading for a while. And so now I know what I like. Right. Anyways, markets move up. On the 23rd, really up here, zigzagging, but eventually, you know, green candles open at the bottom, close at the top. So this full movement here is 126 pips on the day to the upside. 126 pips. The upside. There we go. Right, and then markets come back down, all right, rotate a little bit down, and then the very next day, markets come back down. We're going to look for some supplies and demands in a second. Just give me 2 minutes. Right, the 58 pips movement to the downside. I'm just trying to wrap up this video. I hope you guys have enjoyed this. I hope this has helped you. But there's just one more last thing I need to do at the end of this video to kind of like explain to what all this data means, right? 58 pips there. Right, and then let's see what we have here. Would you have taken a buy at this demand? Is it a demand? Is it valuable? I don't see a good imbalance. I only see 2 candles. Well, that's not an imbalance. That's why it didn't work. Right, there we go. We've got a bullish engulfing pattern. Right, and even that was tagged a little bit, and we've got a lower demand there. I probably, knowing you, would have tried to take a risk here. And sure, I'd have probably gotten tagged, or if my stop loss was not too tight, I might have gotten away with it, but that would have been sheer luck, right? Sheer luck. But markets do kind of like do a little bit of hunt and then reband this area and then move up. Okay. Extend this to the left. This is not going to work anymore because we know it's broken, right? And yeah, I know some traders will do something like this. They'll draw this on the next day and say, okay, fine. There was a new bullish engulfing pattern, and draw it to the left, but I promise you that always generally ends in tears. Once an area of value is broken, just respect it. Respect that it's broken. It doesn't want anything to do with making you money, and just move on from it, right? So I'm going to leave this there, and actually, so that we have some type of balanced record at the end, I'm going to mark it red. So red means we're a rule-based area of value that failed. All right, that failed. So this failed here, right? I can't see anything going on up here. You know, we've got a cluster that's not a Bayesian Gaussian pattern. I don't have an imbalance, and then eventually markets start to trickle down. Remember, most supplies are going to get wasted now. Why are they going to get wasted? Well, where are we going? We're going up. Euro has picked up the power from the governing demand and is making its way up to where? To those weekly supplies we drew at the beginning of this particular video, right? So here we are. Markets kind of like recreated demand, whatever you want, but the opening here is to the downside to create a low. This is important. The London session, guys, the reason why I like, you know, trading, most of the time it creates the low of the day or the high of the day. If you go back to the scenarios I've just done, you will realize that once markets start from a low, they never make a new low, right? They drive it all the way down, or they drive it all the way up, and then markets move randomly after that. Something to kind of like keep in mind, right? So markets move down 50 something pips, looking for this so-called low that I'm just bringing up, and maybe we'll do a part 2 later on. But I do want to leave some things private for registered students, right? And then markets kind of like move up a little bit again, another 60 pips, only to just kind of like drop down. So if you really think about the movement of the day, you're a 32 pip day, and that's common, right? I'm hoping you're starting to see this, that after 100 pips here, markets will slow down and collect the pace, 32 pips, and just calm down. And generally speaking, every time markets do this 32 pips nonsense, let's quickly find another one like that. Has it been a while? Where is it? Where are you? There you go. There's a 34 pips day. Every time markets create a 34 pips nonsense, there's always an order block that's just violated. Look at this. Remember this supply? I told you that it was never going to work. Look at several demands in there that were violated. Like every time markets, to me, it seems like, and this is just 1 month, right? We might even need more data. If you go through 2 months, 3 months, every time markets cool off, because the 34 pip movement in Euro USD means markets were ranging, to be honest with you. There wasn't anything incredibly happening on that day, right? And so we get something similar, a break of a demand, markets kind of come up, but eventually only move 32 pips overall on the day from its low to the next day. The very next day, markets then continue with the usual pattern, bullish engulfing pattern. Scenario analysis. How many bullish engulfing patterns have they been so far throughout the month of May? That probably in your trading journal, in your medulla oblongata, should be an order block that has value to you, right? It happens a lot in the mornings, and normally markets come back to it every 24 to 48 hours. 24 to 48 hours. Am I making this up? Hell no, I'm not. Here's another one. 24 to 48 hours. Am I making it up? Absolutely not. Okay, this one happened on the same day, which is even brilliant. Quick money. But you guys get my point, right? Markets have a tendency, it seems, to open on the London session with bullish engulfments on the 1 hour, and you just have to wait. So you see it happen, and then you'd rather go risk it on the next day or 48 hours from there, wait for price to come to you. Leroy, what's the best way to do that to help my trading psychology? Put a bloody pen in order and move on. Go do other things. Go read. I don't understand traders who want to look at charts all the time. Go increase your knowledge. Go watch the videos. Once you've set the pen in order, you're going to come back to your analysis to see if it's right or wrong. Go educate yourself. Like, stop market execution, looking at charts, changing your mind every 5 minutes. You're going to drive yourself crazy. Right. Talking too much. Markets open, shoot up 80 something pips, our usual number, and then markets then shoot down, give or take 47 pips. Sounds to me quite normal. We're gonna say 80, was it 83? 83 pips plus 47. 83 plus technically 48. You see, it's 47.5 plus 48 pips. We get a 131 pip day. Why did I close the calculator thing? Right, so 131 pips. We are here, guys. We're already 138, right? Pips. We have arrived. We've arrived. And I'm no longer writing the up down thing because that's gonna take time. So I'm not gonna explain what the importance of that in this particular video, but I will cover it another point, right? We've got enough data to do what we need to do, right? So we know we've got a lower demand here, right? We can see fresh touch has already happened on the lower demand. We can also note a couple of things that markets is trying to be fancy, man, all right? You can see there, after the fresh touch, created another bullish engulfing candle and then gave it a fresh touch. 365 traders, we only trade unfilled orders. So look at the obsession of smart money. They ain't letting no money go because this is a shorter term trend. Order block at 9, 10 a.m., come fill it up. Boom. New York session starts at 3 o'clock, fill it up. Boom. Right? It comes back again the following day. Right? So this is now the first one, which is not the lower demand. My pending order would be here, but I definitely would have taken an intraday trade there on the day if I was paying attention. If I'm paying attention, and I now know, according to my scenario analysis, in the month of May, bullish engulfing candles that meet the rules are a classic way to bag pips. I'm writing down these pips so you can go calculate how much money you missed out on in the last month of May. I want you to know that number. Then vow to become better every day in every way as a trader by going to apply what I'm teaching you right now. You have to mark up your charts and start to anticipate the next move. You see, this is where price is right now. So we're almost done with this video. We are almost done. My driver brings my son back at 13:40. So I've got about 20 minutes left. And today is Friday. So I'm going to be bothered by ice creams and whatever. Right. Anyways, look, markets then open here at 9 a.m. the next day. Slight movement to the upside, 53 pips. This is what happens next. Markets come back to retest. How many tests, areas of values can an order block of this nature take, right? 1, 2, right? So markets, let's just come here all the way up to the close. Red candles open at the top, close at the bottom. So somewhere there up until the next day, 9 a.m., right? So let's say the markets here moved up about 42 pips in average. We do know that they moved 55 pips up, then came back down for a retest, then it went up again for the rest of the day, 42 pips to the upside, right? That's happened. Somewhere in here, you would have had drawn a supply for yourself. Maybe that would have been your target. If you wanted it to be your target. Remember, I'm always a one single trend trader. You guys have seen me do this many times. I'll say, I'm going to buy here. I'm going to wait for price to buy here. You never hear me saying, I'm going to sell all the way down to buy there. Same logic. I'm not looking for sells anymore. I don't know if you've noticed, because my governor has told me what's going on. They didn't. I thought the governor was going to break. The governor did not break. I have now marked where my weekly supply is. We are on the 27th of May. Let's quickly go to the weekly time frame quickly just to see where we are. So on the 27th of May, the only yellow, if you guys start to see yellow on the chart, the only yellow is here. Let's go to the daily time frame. The only yellow on the chart is this area of value that we drew earlier on, where there was a Talitha area. It's broken, but then we said we know that this could be used. Remember, we spoke about this at the introduction. We say this could be used. It's got a beautiful imbalance. That's the only yellow that you guys are starting to see. I'm gonna go back to the 1 hour time frame and let's see where we are to the proximity of that yellow zone. Why is that yellow zone there? We'll get to it now. We know it's above us, but we're getting close to it. Okay, so 42 pips the next day, and then what does markets do? Markets open higher. A little bit higher, bullish engulfing pattern. Again, takes off. It is used again. Seems to work again. Supply is obviously broken here, so it's not even an issue, right? And just to re-emphasize that supply doesn't matter. Markets come in, open higher, retest, and then all of a sudden, price starts to fall. All of a sudden, price starts to fall. Whatever the reason the fall is, there's an order block somewhere here, but this is now in April, right? So if your charts are always marked up, you'd have had a yellow zone to tell you the future. There's a 1 hour order block there. You think I'm making it up? I'm not making it up. I don't think I'd have been in the sale. I'm just explaining to you why markets are falling there, because some of you have been taught something incredibly false about price, and that it is random in nature, right? There's a strong bearish engulfing pattern there. I'm going to mark it in yellow. Yellow is my supplies. I'm going to delete it after this because I just want you to see it. I don't want to use it because remember, my thesis is I'm buying until I get to these daily, weekly supplies. That's my thesis. But as a day trader, you can make money however you want to make money. Is this mad accurate or what? This is incredible. This is literally what is currently up for grabs in our course. If you apply this information, there it is. So it's random to you why price fell that day because you don't know. The markets made contact with the previous supply that was fresh. You saw there was nothing that made contact with it until markets got here. Markets never forget supply and demand. Make contact with the supply, price falls. So then we have a very big fall. We have this demand working for a short while. Your profit target would have been on a max supply, a valuable supply, right? Then markets start to fall up until the very next day at 9 a.m. So markets fall 54 pips after coming up about 50 something pips. It's a 100 pip movement, but I'm going to choose the bigger leg. I'm going to say 54 pips drop. Detailed scenario analysis would need you to tell me how many pips up, how many pips down. That's important data. There's no time to explain it in this particular video, right? Remember, there's a supply now that's triggered this big fall. The very next day when markets open at 9 a.m., what is it opening the bullish engulfing pattern? No, it's not. It's opening with a bearish engulfing pattern. Is it going to stop at the order block that was built upon momentum as price was going? No, it's not. It's going to fall at the fresh demand, the lower demand that I was telling you about to put your pending order when I spoke about it earlier on. And that's what price does. It's, I don't want to say simple, but I refuse to believe trading is hard. Discipline to learn trading is hard. Discipline to do the right thing is hard. Trading, when you apply yourself, is not hard. 56 pips to the downside, very nice and clean. And naturally, 56 pips back to the same supply, if not higher, about 64 pips. And then markets kind of like rotate and fluctuate somewhere there. Right, so we're going to call it this like a, what do I even say? 50. Okay, so 66 up, 66 back up, 67. So about 130 pips now so far. And then from there to the next day, right? Somewhere there, the just before 9 a.m., those order flows from today. You see this, see what they do just before 9 a.m., a bullish engulfing pattern is formed, right? So 120 something pips plus 30. So that's kind of like quite a busy day for price, right? So let's average this out at about 150 something pips, 155, could be more or less. I'm just saying total movement up or down, all right? Very, very big day here. Following that supply that hit there, all right? And then markets the very next day open a bullish engulfing candle, right? Retest someone here is trying to test someone's audacity to either move to the upside. Do we have enough power to break to the upside? The answer is no, and it's because this 24 to 48 hour bearish engulfing candle on the other side is still at play. Very first drop. This is the first pullback, fresh touch, and then this is the retest. We know our retests are exotically dangerous. I don't know if I'd have been in the sell. I'd have probably stayed out of it and waited to buy. I definitely know I wouldn't be trying to buy again here. Why, Leroy? Well, remember we spoke about it. We said there's a fresh touch and we're waiting for a retest. So I would not be there. So far, orders and our rules are working very well. Markets then dive down, fresh touch, retest. I'm not trying to sell again. 2 blocks, 48 hours on the 1 hour time frame. According to my scenario analysis on Euro USD, it tells me that I'm safer reflecting on every single order block within a 48-hour period. So far, that's what I've seen work the most, work very well, right? Geez, Louise, markets go down. A part of me would have been very jealous because this is such a nice sell. Right, nothing to catch price. There is no order block here, so markets just fell, here and did what we call an original turn, a turn that doesn't need your permission, turn that has absolutely nothing to do with you. Anyways, 117 pip drop, and then eventually there's some consolidation, and then markets rotate and open somewhere there 9 a.m. yesterday. So yesterday's movement, Euro USD in average moved a total of 84 pips. Again, right? After striking down, if you paid attention, you'll notice that the original turn was blessed with a long wick. Yes, we can agree to that, but the original turn also gave us a bullish engulfing pattern that we can now mark out. Now there are two. There's one here that was still waiting to see some mitigation from, right? And then there's another one just above here, which had this consolidation on top of it, but markets haven't actually come back to test it, right? And then markets open here at 9 a.m. This is now yesterday, and yesterday markets moved up, straight up, no funny games for about 75 pips. I'm so glad I managed to do this on time, and we now got to the end. And those of you who are still around, you guys are amazing human beings, and I hope this is helpful to you. You do this to crypto, you do this to stocks, you do this to whatever you want to master. Scenario analysis is checking left to right before you make a turn if you're a driver. Scenario analysis is making sure that everything as a pilot, all your systems are okay before takeoff. Some of you guys trade without even knowing the terrain you are trading in. Do you see the change of hands, the flow and change of hands in the market? Right, now today, what happened today? The morning of NFP on the London session. With all this information that we've put together, look at price. It's hanging like a fruit. It's already, started to show micro signs of weakness. We don't really have a very good imbalance here. It'll be too early to call this a supply. Let's kind of like drag across there. Also, not much going for it. So I'm reluctant to do that. In fact, I would much rather say there was a bullish engulfing pattern here, which is trying to react off this bullish engulfing pattern there, right? And now we are seeing a break of some buys, right? So yesterday at about 8 p.m., right, Euro USD was trying to launch a little bit higher, and now it's failing. It's failing to do just that. In fact, it's already broken below. And then if we come back to the 9 a.m. opening of today, and we start to just mark out our areas of values, we also have inconclusive data right now as we speak, because for me, ladies and gentlemen, to call this a supply, I would require my imbalance rule to be met. Since price did not give us a bearish engulfing pattern, I would require that module 1 imbalances are met, right? But it is safe to say that something messy is going to happen. You've got a broken demand, low hanging fruit, but a non-confirmed supply. All right. So what would be nice at 2 p.m., because this is on the 1 hour time frame, is that if this candlestick here, the one that we're looking at, folks, if this candlestick right in front of us, the one that we're looking at 2 p.m., ends up red. What time does NFP drop today? Ugh, I've already, let me just move. I'm just trying to, is it 2:30, 2:15? I cannot remember. What have I done? Oh, it's June. What's the day? Friday. Sorry, I apologize. Right, so NFP is here. 2:30 today. Cool. So on the 1 hour time frame, if this candlestick at 2 p.m., because this candlestick is going to have to close at 2 p.m. If this candlestick at 2 p.m. today closes red, right, this one here, we would officially have an imbalance. And then we're going to have 30 minutes before data drops. And in 30 minutes, that data is going to have a spike, because news creates volatility, and spikes generally are basically a big movement up or a big movement down, and it just turns into a wick. And if that spike makes contact with the supply, which so happened to be there, I would not be surprised if price comes down. But if price is coming down, and this is correct, I'm just throwing some stuff out here, this is correct, and EURUSD comes down because of NFP, what does it mean? It means NFP is going to be positive. That's not the logic right now. Remember, I presented the logic of the week last night. I said ADP says they didn't find enough jobs. And then I looked at the dollar. When you look at the dollar, the daily time frame, the dollar is trying to fall. Then I say, check your charts an hour before. So now let's go look at the dollar. How did the dollar wake up feeling today? In the 1 hour time frame. Right. So we drew this up in the public Telegram group. I think I sent this chart to you guys earlier on today, and I can see that the dollar has a supply on the 1 hour time frame, that the dollar would love to get to that supply. the dollar, the only way the dollar can get to that supply is to kind of like go up a little bit. We can see that the dollar broke structure, BOS, so it really calls for a movement, like I said, to the downside. I thought the dollar was going to run all the way down here by 1 o'clock. It did not, right? So this is no longer something to worry about. What is interesting, however, is that the dollar seemingly is trying to test this BOS, and it's got very limited time to do that, right? We've only got about an hour left before NFP drops. If markets move like this, dollar makes contact there, right? And remember, this movement to the upside, this short-term move to the upside, is going to have to push Euro USD down short-term. And then when the dollar gets here, the long-term movement to the downside, which you can see is where the most money is, if that was to happen, is going to have to push Euro USD long-term to the upside. So now I ask you as a trader, what do you want to trade? Do you want to trade a very short volatile trend, or you want to trade something that's comfortable, easier to read, and that will make you the most money? Once again, dollar moving up in the short term to make contact with that supply may result in Euro USD falling. Give me a second. Okay, my son's going to be here any minute now, but I might have to ask our nanny to receive him so I can finish this properly. Right, so I'm going to make the screen. Well, why am I drawing this? Well, it's there, right? It's yesterday's order blocks. There's a lot of them. Look at this. It's almost like yesterday's order blocks are saying, we don't know what's going to fall due to NFP, but if it falls, we want to have enough buy power to stop it from falling any deeper. I mean, look at this. Order block 365, bullish engulfing, bullish engulfing. I mean, what's going on? And the lowest of them order blocks would look something like this. All right, but just in case, I'm going to draw the whole thing. Once again, I'm not giving out NFP trades. I don't even know what the data is going to be. I'm going to wait to see it for myself. But I'm simply showing you the power of scenario analysis. Now, the last thing that I want to do, especially with relation to NFP, is to have a look at how price has moved so far. Price has only moved, well, right now, give or take 17 pips. We know that Euro USD is bound to move anywhere between 84's high 70s to about 100 and something pips. On its slow days, it will range for about 30 something pips. Now let's quickly, as possible, if time will allow, now let's go back now and draw one structured line from the 1st of May, where markets opened, because I found this very interesting. Guys, I promise you I'm done. Thank you so much for watching. I hope this helped you. You know, I enjoy trading. I enjoy making such videos. If this helps you, please do like, share, and all that cool stuff. Now, this is where we started, guys, today, right? This is the very last day of the month in April. I'm just gonna draw a horizontal ray right across. Boom. And this is just gonna go across the page up until where we are. And then I'm gonna be highlighting a couple of interesting things that, you know, I would have been required. So this worked here. I'm simply saying markets came back to, you know, the main opening of the month, right? One. And there they created a supply in a supply, and then markets used that particular area there too into that supply to supply. I know it seems like this is a support and resistance line. I'm just showing you confluence with my order blocks, how powerful that could be, right? Because that's when markets open. And I'm saying this to say a new month has just started. And if you're doing scenario analysis, you might want to do something like this, right? And then we can see later on in the month when the shift, and remember, these are supplies. I want to start again. May opens selling, trying to get all the way down into our governing demand. May creates a series of supply points up until like the 10th of May. At some point, there is a shifting in the month of May in the Euro USD and the DXY, obviously. And this shifting is premeditated by the breaking of supplies. When you start to break structure, and it is this demand that cooks the pot the most, right? And all of a sudden, these particular supplies or this particular remittances area is used as a flip zone. This is a qualified flip zone. I can now definitely say I've qualified as flip zone. This is the only flip zone I'll trade, not all the other ones where all supplies and demands are broken, then trade on the other side. This one I would, because I can now see that is a structural one where markets then place a demand where there's been a long queue of supplies. Not only are you breaking the supply, but you're finally placing a valid demand on this particular area. And then markets then continue doing their dance for a very long time, being carried up, 1 pips, blah, 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 blah. It is the same demand here on the 23rd of May that markets still have not come back to. That is the demand that gave birth to the current temporary short-term euro strength. All right, and that line there is all the way down there. Right, so I hope this helped. I really hope this helped. We call this scenario analysis. It helps us a lot. If I had a chance to break down how many pips move up or down, would have spoken about a lot of other things. What is interesting to bring to mind, which is something I actually missed, is the fact that at some point the bullish engulfing pattern sure is broken, but so is this very steep sell side here. Markets back to the upside. So I will go get ready. You're going to have to focus on this candlestick at 2 o'clock. See what it closes at 2 o'clock. See if it's a red candle or a green candle. A red candle would emphasize that technically speaking, we now have an imbalance today. That's what a red candle would emphasize. And then imagine if NFP is positive. If NFP is positive, then a red candle, and this is a red candle, we might get some strong dollar strength. We've just seen on the DXY that the dollar could move up if it wants to, but it's only moving up to go make contact with the supply, that short-term movement. This movement here on the dollar, I'm not going to get pips here on DXY. I'm going to get a percentage movement. We're going to use the percentage movement, is about 0.20%, right, on the dollar, okay, which is unfortunately, if the dollar was like a normal pair, then we could go with pips, all right. And that movement up for the dollar, right? If say NFP was to be the volatility that is needed, where price is right now to today's supply is about 10% movement. Like it's very, very close to the same distance is my point that the dollar needs to make contact. Now we've got two supplies on the 1 hour time frame. At some point in time, these assets need to change. They don't move in the same direction. If dollar is going up, euro must go down. If euro is going up, dollar must go down. Something along those lines needs to happen. The data is going to be the deciding factor. Traders who are about to buy euro here hanging are stupid. Traders who are about to sell euro hanging here are also stupid because there is no movement. Like literally, it's like 1% here, like nothing to move on the dollar or euro USD. Once again, wait for confirmation. Let the data come. You've now drawn up some areas of value that you know are going to rock your world next week come Monday. You now know that where price is. You also know how much you can make from this thing. Only looking at this from a 1 month perspective. I really hope this helped. Are there any questions? I hope there are none. And all the best with your trading today. All right, all the best. You know, those of you want to trade NFP, I literally, if I'm in a trade today, it won't be because I'm trading NFP. It'll be because markets moved to a point where they triggered a previous pending order for me, right? And that's all that is. But it'll be very nice to see this play out. However it plays out, I like my logic from yesterday because I'm working off ADP, which has been very wrong, right? So my logic might be wrong right now, but ADP is telling me that there's not enough jobs. So ADP is telling me that, you know, stuff's going to be negative. The stuff is negative. By the way, if NFP is negative and the dollar has to fall, then you want maybe to keep this as a green candle so that you don't have an imbalance. So when NFP comes, Euro USD can break this and keep flying high. Type of situation, right? Just like how they broke this supply and broke this supply and broke this supply, and your next big target would be somewhere there. And would that be normal for Euro USD to move that way? Well, you have to kind of like again refer to scenario analysis. Is it too crazy to assume Euro USD could move from here to match that order block there, right? To be a 38 pips movement up plus this first couple of movements down, right? That could be a very normal dry day, but you will see based on the volatility and how markets react, right? I haven't seen any questions, guys. Shake my hand. I hope this really helped. I really hope this helped, because this helps me a lot. I am simply doing a lot of things at the same time, understanding the asset, gaining confidence. I can see for a fact that if I was a day trader trading Euro USD, it looks like you'd have lost only 2 trades. That's freaking incredible. I honestly don't remember if we got more than 2 rule-based order blocks that did not work. We know we also have money waiting for us here. We've got some unfilled orders, a couple of few places, but this is just beautiful. You do this for Euro USD and Pound USD. Those assets correlate, they move the same. Then you look for 2 other assets that move the opposite of them. So you look for gold, remember, or something. Gold moves the opposite of the dollar, right? And then you look for one chart that has nothing to do with these silly sessions, that is too overpumped, something that's completely separated, so that you can hedge yourself, like completely protect yourself from these type of movements. In the event you get it wrong, you don't want to have 3 areas or 3 charts wrong. You want to have something that's kind of like just sitting by itself. So I don't know, you go shopping, man. You look at what's a non-collectible? CAD JPY. You go look for some oil. You do the same thing. There are institutional traders trading this stuff all the time across assets. And then you arm yourself with 5 charts. I'm going to trade the DXY on average, trade Euro USD, Pound USD, gold, and something random, something CAD JPY, oil, cotton, sugar, the things that are not always linked. So that if you're wrong here today, because NFP messed you up today, like how we could not explain today why did price do this to us? We couldn't explain it. So yes, we'd have taken the loss here. If that happens to you 3 times, you have a chart that will give you money. And you do this, rinse and repeat every single day of your life. You come back to me after 3 months and tell me your account hasn't changed. My job is to ask you to email me your broker statement. I look at your entries and exits. I realize the rules that I've taught you, and I fully refund you if you're registered. I have no problem with that, because it means I'm lying to you. The reason why we've done a 0 refund since we've started is because the rules are not the problem. The rules bloody work. Traders, get disciplined. Because you guys are still here, I'll end with this, but I just don't know if I'll find it. Let me just quickly Google. Don't disappear on me. Don't disappear on me. In my private study, I've become very fascinated with one individual, and his name is well, I don't know if that's his actual name, but I would like to believe it's his name. But he was a preacher man. His name, Preacher Man Ecclesiastics, right? And it's a weird book. In fact, Ecclesiastics, by the way, is one of the only books in the Bible that talks about invest your money in foreign trade, right? It's like some traders who like to quote the scripture of Forex is actually done in Ecclesiastes. Ecclesiastes is also the other guy who says there's nothing new under the sun. It's just simply based on how you apply yourself. But here is something I'm not trying to convert anyone. If you don't want to be a Christian, yeah, it's who I am as a person. It's how I run my channel. And I'm just saying, listen to what this guy says. And you would want to read this across multiple versions, especially the King James version. He says, whatsoever your hand findeth to do. So we're doing Forex here, we're trading. Like that's what my hands are finding to do. Here's a rule to success. Do it with your might. Don't half-ass it. Don't do it 50-50. Don't rely on signals. Don't rely on someone to put your weight behind it. Do it with all your might. Get up, mark up these charts. Do it. For there is no work, no device, no knowledge, no wisdom in the grave where we are going, where thou goest. Anyways, since we're all gonna die, all right, and I've told you that I'm done. I am done working for me and my partner. Our pension is done. Our assets are done. I am technically almost done working for my kids. With Bitcoin dropping this low, I am pretty sure I'm done. I am now working for my grandkids right now. The next 8 years of my life until I turn 40, I'm working for my legacy, for my grandkids, because I ain't taking that to the grave. So do it with your might, guys. Let's get focused. I love this guy. I love it till yesterday. There's just so much there. Whatever your hands find to do with all your might, for in the realm of the dead, where you are going, there's neither working nor planning nor knowledge or wisdom. So why waste your life now? Put in the effort. Shake my hand, ladies and gentlemen. I appreciate all of you. Have a beautiful weekend, and I'll see you on Sunday, right, for our war room, right? And maybe I'll drop a money psychology video tomorrow. I just need to find out what the family is doing, right? 365, shake my hand. God bless you. Peace.